Hey, Steve Jolly with the Home Buying Skills channel, and on today's show, I want to talk to you about how home loan interest rates affect your monthly payment. I want to talk about 2022 expert predictions. So in order to explain how home loan interest rates affect your monthly payment, let's talk a little bit how mortgages work. The first thing you want to talk about is purchase price versus loan amount. A lot of people get those two things confused. The purchase price is actually what you're paying for the home. If you offer to pay someone $500,000 for their home, and we're going to use an 80% conventional loan, that means you would only have a 20% down payment of $100,000. 20% of $500,000 is your down payment of $100,000. So your loan is only $400,000 or 80% of the purchase price. So that's the difference between the purchase price and the loan amount. Purchase price is what you're paying for the property. The home loan amount is what you're borrowing from the bank and what you're paying to the seller in addition to your down payment. Now, when you calculate your mortgage payment online, one of the things many mortgage calculators online do not include is taxes and insurance. And those are two important things that can cost you several $100s a month or more. And you want to know what those are when you're checking out if you can afford to live in a place or not. And here's what you can do to find out. In most places across the United States, property taxes are public information. You can look that up through public sources online, search property tax assessor for your area, and you can get an idea of what the average tax rate is for the value of the home that you're wanting to purchase. Now, for insurance, I recommend that you call the insurance agent who you currently have renter's insurance with and ask him to give you an estimate of what it costs for homeowners insurance in this area for the approximate value of the home that you want to purchase. And that should give you an idea that you can figure into your monthly payment to make sure that what you decide you want to buy that you can afford. Now, interest on mortgages in the United States are calculated using simple interest. And what that means is your payment amount for principal and interest stays the same through the life of the loan, but the amount that's going towards principal and interest varies with each payment. So your very first payment is going to have a high interest rate and a low amount going towards principal. And over the life of the loan, as you make more payments, more and more gets added to principal every month. So you get to the end of the loan and your very last payment will be mostly principal and very little interest. Now let's walk through a loan calculation at 4% and 5% interest and see what the difference is to your pocketbook. Now, a $400,000 loan at 4% interest is going to give you a monthly payment of $1,910. And now the same $400,000 loan at 5% interest is that same payment every month is now $2,147 a month. Now that's an increase of $237 a month. But over the life of the loan, that's $85,230 more dollars you're paying towards interest for the same home just because the interest rate went up 1%. A small 1% increase in interest rates makes a huge difference over the life of the loan. So how can you reduce the amount of interest that you pay over time as the interest rates are increasing? One of the things you can do is you can consider a 15-year loan versus a 30-year loan. Now with a 15-year loan, your payments are going to be higher. And in this case, a $400,000 loan at 4% interest is going to be a payment of $2,959 a month. But while your monthly payment is higher, you're going to save over $154,000 over the life of the loan in less interest paid. So a 15-year mortgage versus a 30-year mortgage can save you a ton of money. One additional strategy for a 30-year mortgage is making one additional mortgage payment every year. And what you can do with that is cut 3 to 4 years off the life of the loan. And using the numbers we used previously, a $400,000 loan at 4% interest, if you made one additional mortgage payment per year, you could save $41,000 in interest over the life of the loan. That's a lot of money to save. Now, here are a few different strategies you can use to lower your interest rate. First thing you can do is just keep your eyes on the interest rate market as you're looking at property. Second thing you can do is consider a 15-year mortgage over a 30-year mortgage. That'll save you tens of thousands of dollars over the life of the loan. And finally, that last strategy is just to make one additional mortgage payment every year. That can save you thousands of dollars too. Now let's talk about expert predictions for the loan market for the rest of 2022. Now most experts believe that interest rates are going to stay at 4% or higher for the remainder of the year. And a lot of that depends on what happens with inflation, the economy, the war in Ukraine, and a lot of other factors. So let's dig in to see what they said. Now, Nadia Evangelou, who's a director of forecasting for the National Association of Realtors, talked a little bit about the Ukraine war. And she said the war in Ukraine could actually make interest rates fall as investors move to the safety of bonds and out of the stock market. Now, Greg McBride, the chief financial analyst for Bankrate, is worried about inflation. He said if the Federal Reserve doesn't get inflation under control, we could see interest rates at 4.5% or higher for an extended period of time. Len Kiefer, deputy chief economist for Freddie Mac, talked a little bit about mortgage bankers and what their plans might be. He suggested as interest rates increase, some lenders may decide to compress their margins in order to keep the flow of purchases and mortgage refinances coming into their bank. That's a huge source of revenue for them they'd hate to see go away as the interest rates increase. So we'll have to see what happens. Nobody knows what's going to happen in real estate in the United States. So the best thing you can do is keep your eyes on the market and be prepared to strike when you're ready. Now, I hope you enjoyed today's video on home loans. If you liked it, click the like button to let me know you enjoyed it. And if you have specific questions, leave them in the comments below and I'll be sure to answer them. Don't forget to subscribe and click the bell so you never miss a future episode. Take care. Have a great day.